Rajat. He wants to understand how does a huge AUM affect the performance of a small cap fund and till what level is it safe to invest?
Small cap funds face a problem when they get bigger because there's a dearth of ideas. Small cap, at the first level, there is a difference between managing a small cap fund and managing a large cap or a mid cap or a very diverse fund, simply because they are very idea intensive. When you look at a large cap fund, run by one fund manager as compared to another fund manager as compared to another fund manager as compared to an index fund, the overlap of these portfolios, these four portfolios, can well be 80% because large cap funds are supposed to invest in the top 100 companies. So if you have to choose 25 of those top 100 companies, they are likely to be, 20 of those 25 companies might be the same. And the other advantage is that when you have to buy any of these companies, you don't have to worry about the liquidity. They are available in plenty. They don't have a huge impact cost when you try and buy something worth 50 crore, 100 crore, 200 crore, even in a day. That may not be the case with small cap. Small cap companies, by their very design, are sub 1,000 crore or 1,500 crore company. If you are going to buy one, buy a meaningful position in this company, then if it is a 100 crore fund or 200 crore fund, it might be okay. Even if you take a 5% position in a 100 crore fund, will amount to 5 crore rupee investment, which in many of the small cap companies will still not be possible even today. Many of the promising companies or the micro caps or the small caps are edging towards mid cap. Maybe they are there, it might be a possibility, but not underneath that. So building a position in small cap could be hard. Once you actually get bigger, then you have to look for more ideas. One is the liquidity challenge. The other is that which means that this can be dealt only by having more companies. When you have to look for more companies, it's not easy to come by because finding and discovering a relatively poor, not so well valued or richly valued small cap, unidentified, unspotted small cap is not an easy thing. So it takes effort. You are not finding, you're not picking those 5 companies or 6 companies from the large cap index. So, and this is what we actually see here. The small cap portfolios of one fund compared to other is completely different. There might be no overlap. There might not be any overlap in their portfolio. So unlike the large cap ones where there could be 80% overlap. So looking for a company idea. So as a fund gets bigger, for the fund to actually find a position, to find an idea, a stock idea, and buy it in an impactful manner, gets harder as you get bigger, because assuming that say if there's a 100 crore fund as compared to 1,000 crore fund, assuming that you have chosen or you have decided or the fund manager thought that he will have only 25 companies to have a meaningful impact. So 25 companies, so a 4 crore position in a 100 crore fund will have adequate impact. But in a 1,000 crore fund, you may not be able to build that position, and it may not be easy to sell those positions when you want to. So this is one problem. So as it gets bigger, in the mutual fund arena, there is something called winner's curse. When a small cap fund does well, and normally if you get right with 1 or 2 or 3 good positions, you do well, and then investors pour money in that. That is called a winner's curse. And when you get more money in a fund which has done well, when it was small, then the very fact that you have become bigger is a barrier to performance, because then you are, so this is the winner's curse. If you win, you are cursed, and if you don't win, then you are not being liked anyway.
Okay.